that is transparent from beginning to finish. The election must be transmitted electronically from the polling booth direct.
The 48th Ordinary Session of the African Union Executive Council will take place this week. The annual gathering will be held in the Ethiopian capital city, Addis Ababa, from Wednesday. Kaelihle Khumalo has more.
The African Union's Executive Council will focus on a number of critical issues facing the African continent. They will look at the AU's participation in the G20 in the United States, consider the reports of the 51st Ordinary Session of the Permanent Representatives Committee, and conduct elections and appointments to AU organs and institutions. They will further consider draft legal instruments and institutional governance matters.
Uganda's Information Minister Chris Baryomunsi has condemned a military raid on opposition leader Bobi Wine's home last month. Wine has been in hiding for weeks after fleeing his home in the capital Kampala, hours before he was announced the runner-up to President Yoweri Museveni in the January 15th presidential election. On January 24th, Wine said his wife had been taken to hospital after soldiers invaded their residence, alleging that they partially undressed and choked her. Uganda's military Chief Muhoozi Kainerugaba, who is also Museveni's son, denied soldiers assaulted Wine's wife, but later said on X that they had captured and then released her. Baryomunsi, who is also a spokesperson for the government, said the authorities would investigate the incident. The International Organization for Migration says 53 migrants, including 2 babies, are dead or missing after a rubber boat carrying 55 people capsized off the coast of Libya. The boat departed from Zawiya on Thursday and then overturned off Zuwara on Friday. In a statement, the IOM says only 2 Nigerian women were rescued during a search and rescue operation by Libyan authorities. One survivor reported losing her husband, while the other said she lost her 2 babies in the tragedy. According to the UN agency, more than 1,300 migrants have gone missing in the central Mediterranean in 2025. And finally, a major review of scientific evidence has found no link between taking paracetamol in pregnancy and autism, ADHD, or intellectual disability in children. The results contradict claims by US President Donald Trump last year that pregnant women should avoid taking the drug known as Tylenol, which is commonly used to relieve pain and fever. Researchers looked at 43 studies, including hundreds of thousands of women. Lead researcher Professor Asma Khalil.
Fever in pregnancy, when it's not treated, is associated with increased risk of miscarriage or premature birth or developmental problems in the babies. And therefore, I think it's important that we have a drug that could potentially help these women. We don't really have many options, many safe options to give during pregnancy. The alternatives are not necessarily better or safer than paracetamol.
Recapping the top story this hour, protesters have gathered in Nigeria's capital Abuja today to pressure the Senate to pass amendments to the country's electoral law a day before lawmakers are due to debate legislation that would make electronic transmission of election results mandatory. For any news stories you would like to share with us, please do send an email to newsroom@channelafrica.co.za or call us on +27 11 714 4459. For Channel Africa News, I'm Cholani Tulo Mwepe.
News. The African Perspective.
In our sports headline, Orlando Pirates may finally sell Relebohile Mufokeng for a multi-million-dollar prize money. And Elvis Smiley collected a huge prize money for his live triumph. I'll be back with these and other stories at the bottom of the hour.
Business, trade, and investment opportunities that put the continent first. Africa in Business with Thami Ngubeni.
It is exactly 5 minutes after 4 p.m. A very good afternoon to you, Chad. Good afternoon, Ethiopia, Gabon, Senegal. Good afternoon to you, Namibia, Tanzania, Malawi. Good afternoon, Africa. Welcome to Africa in Business on Channel Africa. I'm Thami Ngubeni. Coming up this hour, Ghana's Securities and Exchange Commission has issued a directive instructing local fund managers to scale back their offshore investments. We'll find out why. And South Africans to pay a little bit more to keep the lights on. This as NERSA approves higher electricity tariff increases for Eskom over the next 2 financial years. Do engage with us on the various social media platforms. On X, Instagram and YouTube, you'll find us at Channel Africa 1, and on Facebook we are at Channel Africa. If you've got any stories you'd like to share, stories that you believe would be of interest to our listeners both on the African continent and in the diaspora, do send us an email at newsroom@channelafrica.co.za.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
Today we take you to the heart of the African mining sector as the 2026 Mining Indaba gets underway in Cape Town, South Africa. The event is one of the continent's most influential gatherings of industry leaders, policymakers and investors. It is taking place against a backdrop of rising demand for energy transition minerals, growing calls for sustainable and inclusive mining, and the push to add greater value on the continent. Delegates are discussing how Africa can leverage its vast resources for long-term economic transformation. Channel Africa's economics reporter Innocent Somosa has more from Cape Town.
This year's discussions come at a critical moment for the continent as Africa positions itself as a key supplier of minerals needed for the global energy transition, while also pushing for greater local value addition and policy certainty. South Africa's Minister of Mineral Resources and Petroleum, Gwede Mantashe, underscored the importance of policy coordination.
We need to talk on export earnings. We need to talk about it in terms of its contribution to development in the continent.
In his keynote address, Zambian President Hakainde Hichilema says every mineral on the continent is critical.
Every metal, every resource is a critical resource. It's true. Every dining time in your house, your cutlet, it's minerals. Switch on the light in your house. Ordinary conduct, daily life. It's minerals. It's copper. It's other things.
The president says there's more strength in collaboration.
And I want to commend South Africa, Minister Mantashe, for your leadership in driving continental collaboration. I was listening very carefully to the panelists here, to the things that the panelists had to say. It is true that Africa must collaborate. Yes, individual national interest is only logical.
Meanwhile, Zambia wants to ramp up copper production. I had a chat with Helen Lubamba, Stanbic Bank Zambia's head of corporate and investment bankings, to look at the biggest financing gaps holding the sector back.
There are quite a number of issues, but the ones that would be absolutely pertinent to the Zambia situation and most countries around the world would be to do with the fact that we're dealing with a commodity that requires long-term investment, and a commodity that's also susceptible to market prices and demand globally. So what you need in a scenario like that is where can you find the investment opportunities where you've got a stable investing climate, stable policy, because the one thing you can't control is the commodity price. So one of the things that does hold back investments is what the kind of policy landscape you're dealing with in the region that you're operating in.
How critical is policy stability in attracting long-term mining investment into Zambia?
I think we've all accepted that there is a there is a perception premium that adds to the cost of funding on the continent. And I think it's becoming a very, very pertinent subject right now. And I know it is spoken about by a lot of business leaders, including our own group, Standard Bank Group leader, who has spoken and is very passionate about trying to address that perception premium that is impacting the cost of funding and the perceived risk of investment on the continent. If I speak about Zambia, over the last number of years, there've been quite a number of issues that have impacted the investment environment, particularly in the mining sector.
With high-level talks continuing over the next few days, delegates here will be watching closely to see whether policy promises translate into concrete investment commitments. For Channel Africa News, I'm Innocent Samosa at the 2026 Mining Indaba in Cape Town, South Africa.
It is exactly 11 minutes after 4 p.m. Central African time as we turn our focus now to energy issues in South Africa. The National Energy Regulator of South Africa, NERSA, has approved higher electricity tariff increases for Eskom over the next 2 financial years. This is after acknowledging errors in its previous calculations. Under the revised decision, Eskom's electricity prices will increase by 8.76% in April this year and a further 8.83% in April of 2027. The decision comes after a High Court ruling compelled NERSA to reassess Eskom's allowable revenue and undertake a public participation process, reopening the tariff determination and ultimately resulting in higher charges for electricity consumers. For more on this, we joined on the line by Matthew Cruz, an energy analyst at Empower. A very good afternoon to you, Matthew. Welcome to Africa in Business.
Hello, thank you for having me.
I've highlighted in my introduction some of the factors surrounding this particular decision that has been made. But if you could just go into greater detail for us on exactly what it is that could have led NERSA to approve this higher tariff increase. And could this determination as well be an indication of the state of Eskom's financial position?
Yes, so it's interesting to see what's happened now with NERSA coming back after their public participation process that they were kind of instructed to do by the High Court after AfriForum launched a objection to the behind closed doors agreement they reached with Eskom. And to give some insight there, Eskom had said to NERSA, no, you didn't do the multi-year price determination number 6 correctly. According to our understanding of how you're supposed to be performing the calculations, you have incorrectly calculated the depreciation revenue that should be allowed and also the return on asset base that should also be allowed. And so therefore we say, we as Eskom say that we are owed 97 billion rand more, and then NERSA came back saying, okay, well let's agree to settle on 54 billion rand. And then AfriForum said, hello, hold on, you can't just make this a kind of approval behind closed doors without going through a public participation process. So we heard that in December that the High Court said to NERSA, no, you need to go and perform this, and that has now taken place. NERSA then sent out what, in my opinion, was not an actual public participation process document where they were asking for inputs from the public on 10 different aspects of the price increase, asking for us to provide them with information on how Eskom cannot be awarded undue compensation for 10 different facets of the determination. But long story short, what ended up happening is the exact same number that was reached of 54 billion rand has now been confirmed by NERSA. So it's pretty much like they've disregarded the entire participation process with the public, and they came back saying, actually, we're going to award Eskom an 8.76% increase this year in this financial year, and then next year 8.83. So they unfortunately have used now this process. I feel like as a tick box exercise to say yes, we've complied, but they haven't changed anything. And this reason that Eskom has come with for saying we need more money because of depreciation being incorrectly analyzed is the same reason for the last 10 years that Eskom has come back 4 times to NERSA saying, no, you didn't give us the correct tariff increase because of depreciation. So it brings into question whether NERSA actually knows what they're doing or not. And that's kind of the main concern from my side.
So let's talk about the transparency of this entire process. Yes, consumers were consulted, but the question is, were they adequately consulted, and was their input actually factored into the final decision making? Are there rooms, are there still avenues for an independent analysis that takes into cognizance the results of the consumer process and what the tariffs then should be, considering what the consumers have said?
Yeah, so unfortunately, it's a hard no. I don't feel that the input from the public was considered. Some aspects to kind of focus in on that is that the High Court ordered NERSA to go and perform a public participation process, and that's like outlined in the Constitution as what's needed to happen whenever there's a public decision that's going to be made that will materially impact the public of South Africa, is to go and interact with the public and receive input and have a public participation process where it's meant to be in person and you receive then verbal inputs and also written submissions from the public. And I feel that this was not actually followed, because what NERSA did is they did not have sessions where public could actually come and participate and be there in person and then give their kind of points of view orally, and that's recorded down. What they did is they sent out a consultation paper on the 31st of December asking for inputs by the 21st of January, which is mostly over a holiday period. And the consultation paper said, please send emails with your written responses to these 10 facets of questions, basically on different aspects of the MIPD, the multi-year price determination, one regarding depreciation, one regarding return on asset base. And it was like they were kind of crowdsourcing a response to Eskom, basically asking for the public's input to be sent to an email. And for me, that's not a public participation process where industries are able to put forward, if we have an increase of 8.8% this year, our industry will suffer huge job losses because it'll make the price of electricity too high for us to be a growing concern.
And
so
as you pointed out, that happened during the holiday period, so there's no opportunity for any sort of collective engagement. But what impact will these increases have on the cost of buying electricity for consumers, and then in turn on the cost of living?
Mm-hmm. So the approved now final kind of price that we got from NERSA of the increase that's going to take place from the 1st of April, it's kind of like a bad joke on April's Fool's Day, is it's 8.76% increase this year, and then 8.83% next year. And this is the same exact figures. They didn't even change. They didn't even like shift it by it's like 0.1%. They just came with the same figure that they told us in September. And this kind of shows me that they didn't actually really consider any input from the public, because they had previously given these same figures in September saying, oh, we made a mistake and now we've made an agreement with Eskom behind closed doors and the increase is going to be 8.76% and 8.83%. So this is now unfortunately going to be the next 2 years increases. And beyond that, unfortunately, they also said that another 19 billion rand is going to be claimed from the next price increase that hasn't even been applied for as yet. So before even going into that, they've already allocated another around 3% price increase before even considering Eskom's inputs for the next multi-year price determination. So
what then is the long-term impact of this as far as consumers are concerned? Mm-hmm. Could these repeated tariff increases, as well as the ones that are to come that have been alluded to, lead consumers ultimately to opting for other alternatives such as solar, for example?
Yes, yeah, and this is kind of where the big Eskom death spiral conversation now comes to the fore, or it's termed internationally as the utility death spiral, where they charge higher energy users and larger energy users that would typically compensate for the lower and indigenous households or poor households. They charge them higher tariffs, and the mines and the large industries then see this higher tariffs and they're like, oh, well, actually I can reduce my reliance on Eskom by getting large-scale solar and battery. That's the company that works for what we do. And it costs around about half the price that Eskom's charging to get that. So they can get it through finance, for example, and we would then come in and put solar farm batteries down and provide them power for half the price that Eskom's charging them. And through that, then, a whole bunch of clients have been leaving Eskom, and they're actual demand has decreased by 9% over the last 3 years. And the death spiral aspect of it is that then they look to the middle income households and also the middle section of the public of the private sector of the businesses, and they try and increase tariffs there. And then those businesses and households see, oh, well, actually, if I get solar as well and batteries, then I can also just remove my reliance on Eskom. And then the only people that are left are the indigent households and the businesses that can't get solar. So there's a death spiral aspect to it where they just keep on trying to increase tariffs, but then people reduce their reliance on Eskom through solar, and then a different solution is needed to be implemented in the country.
Certainly, I mean, they really are finding themselves in a situation that they've got to future-proof themselves and mitigate their risks as much as possible. Matthew Cruz, thank you so much for your insight. Much appreciated, sir.
Thank you. We'll speak again.
Thank you. Chat soon. That's Matthew Cruz. He's an energy analyst at Empower. Not great news for South African consumers. An approved 8.7% tariff increase for electricity prices. And those go into effect in a couple of months' time, come April. And then April next year, another 8.83% approved. It's 22 minutes after 4.
Africa means business. Tune into Africa in Business with Thami Ngubeni for the future of the African economy. Channel Africa, the African perspective.
This is it. It's the new era of SABC2, and it is officially here. Stories, voices, and moments that South Africans can experience together. Live in every beat. Tonight's an SABC2 night.
Get Channel Africa on DSTV Audio Bouquet. Channel 802.
Let's just do it.
Your life just got easier. Get the Channel Africa app and take us wherever you go. Catch the latest news, enjoy your favorite shows, stream the music you love, and stay connected to the continent. All in one spot, right in your pocket. Simple, quick, and always with you. The Channel Africa app. Download it now on iOS and Android. Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
So we turn our focus now to developments in Ghana, where the Securities and Exchange Commission has instructed local fund managers to scale back their offshore investments. They've asked this as part of efforts to support the cedi and strengthen macroeconomic stability. Under a new SEC circular, SEC being Ghana Securities and Exchange Commission, fund managers will now be permitted to invest a maximum of 20% of their assets under management in foreign securities. Funds that were previously allowed to invest all their money offshore will now be limited to 70%. The move forms part of broader financial sector reforms that are tied to Ghana's 3-year IMF-supported program, which is aimed at stabilizing the economy and addressing the country's recent and severe economic challenges. For more on this, we joined on the line by Ghanaian economist George Antwi Boasiako. A very good afternoon to you, George. Good to be talking to you once again. Welcome.
Good afternoon, and thanks for having me.
So, George, how does reducing offshore exposure help protect the cedi, and also how does it help strengthen macroeconomic stability in Ghana?
Thank you so much. Ghana, by this policy directive by the Securities and Exchange Commission, seeks to actually consolidate the gains that we made in the last 12 months with respect to how we are able to sustain the appreciation of our currency, 40% appreciation, which is one of the best macroeconomic performance. And so, looking at the situation, the Securities and Exchange Commission is using this policy, I should say, to actually limit outflow of forex from Ghana to the rest of the world, because even just within 2025, we shipped close to about $1 billion out of Ghana for such investments. So it's important we institute such measures to actually deal with issues of volatility on our currency, and also ensure that we preserve our international reserve, which is now over $13 billion. The government intends to increase our international reserve to about $20 billion by 2029. So using this policy by a Security Exchange Commission is going to actually help us to achieve that objective.
It's quite clear. It's quite clear. It's quite clear, George, that there are a number of positives that can be achieved from this as far as domestic stability is concerned. But if we look on the flip side of this, is there a risk that restricting offshore investments could actually reduce portfolio diversification and then increase domestic risk?
That's both positive and negative, but I see the positive outweigh the negatives because this is investor confidence, because we are using this policy to ensure that we actually stabilize our macroeconomy. So using the having that in mind, an investor know that if you want to invest in Ghana, they have a stable economy, their currency is stable, their interest rate is stable, and things like that. So the long-term impact is what we are looking at. Even in the short term, we want to ensure that we don't repatriate all our forex to the outside Ghana, which is not a very good practice. So this is a way of trying to ensure that we boost local investment by our various fund managers. Unlike previously, we are taking all the money that we're able to accumulate here, and those monies are invested in securities within the foreign markets. You are investing in the U.S. government. You are investing in companies outside our jurisdiction. How do we benefit from such investments? Yes, they make some good returns, but to the long term, it doesn't benefit Ghana as a whole. So for me, looking at the benefits, the positives are more than the negatives. Of course, in the short term, it will actually affect some of the inflows because some of them are short-termist in terms of how they expect return from their investments. But I think this is an initiative that has a very long positive impact on Ghana's economy.
Do Ghana's domestic capital markets currently have enough capacity to absorb this redirected investment?
These are new waves.
George Antwi Bosako, it looks like we've lost our connection with George, our producer, but we'll try and get him back on the line just so we get, wrap this conversation up in a way that is succinct, because it certainly is a pivotal one. It does not only impact Ghana and its own domestic market and domestic stability, but also it affects investors across the world. How would they likely react to this? And what are the type of concerns that this move raises about capital controls? And granted, a lot of positives that George Antwi Bosako has highlighted there as far as preserving their international reserves and ensuring domestic stability and preserving the gains that Ghana has made in their macroeconomic stability over the past few years. That was George Antwi Bosako. We'll get him back on the line as soon as we can.
Get Channel Africa on DSTV Audio Bouquet. Channel 802.
We do have George on the line. George, unfortunately, we lost you there towards the tail end of our conversation. But I thought, let's wrap this up properly and talk about whether or not Ghana's capital markets are able to absorb all of this investment that now has to be redirected.
Like I said, this call for some level of creativity and innovation on the part of the fund managers. Now, they should look at how they can diversify their portfolio. 30% need to be in Ghana, and you are supposed to work with 70%. So it requires some level of innovation and creativity. But you go to there's that growing conversation around how we spend our pension funds across Africa. How do we even redirect our investment to local startups and other local innovations. Areas like real estate are there. So there are other options domestically that fund managers can also consider. So it's something quite new. They are giving about 3 months to actually realign their operations. And I believe this is quite enough time for them to be able to be as innovative and creative as possible. We don't need to repatriate all the revenues or the money that we accumulate to our fund managers to just extend it outside our jurisdiction. So it will require some innovation. They need to diversify their portfolio to look within the local economy and how they can actually diversify to support local economic development.
Could this policy affect Ghana's attractiveness as an investment destination, George?
I think this will rather even going to strengthen our positioning in terms of how ready we are to actually deal with people who want to invest. I'm talking about foreign direct investments. Yeah, because now this will ensure that we have some level of reserve in Ghana, and this will also contribute to stability of our local currency. Now inflation is doing well. If we are having our CD also very strong, as we have seen in the last 12 months. They mean that an investor who seeks to invest in Ghana knows that the macroeconomy is stable, and that's one of the fundamental reasons they want to invest in a country, and Ghana is showing that strength. Yes, but like I said, in the short term, this is something that has not been done in the past few years. But if you look at the trend, as a country, we are doing negative in terms of outflow, inflow. Last year, like I said, just a year, you are doing just over $1 billion going out of the country. If we're able to strengthen our reserves, it means that we are even able to attract more foreign direct investment. And that's one key thing that we seek to pursue, just not to talk of only chasing after profits from investing in foreign securities, which good, but to the larger extent, is not good for our domestic economy.
George Antibuasiako, always a pleasure talking to you. Thank you so much for updating us on the ins and outs of this new policy. We thank you for your time, sir.
Thank you.
Thank you. That's Ghanaian economist George Antibuasiako taking us to exactly 33 minutes after 4 p.m. Central African time as we head over to the markets desk where Thabiso Lehoko is standing by with your latest market indicators.
Business news on Channel Africa. The African perspective.
Thanks, Thami, and good afternoon. $1 in South Africa is trading at 16 Rand 2, Botswana 13 Pula 10, Namibia 16 Namibian dollars 2, and in Zambia it's at 18 Kwacha 63. In Kenya, the dollar is trading at 128 shilling 45. Ethiopia, 155 birr 78. Uganda, 3,000 shilling 537. And in Tanzania, it is trading at 2,000 shilling 575. In Nigeria, the dollar will cost you 1,366 naira. In Egypt, it's at 46. Egyptian pound 834. Tunisia 2 dinar 844. Algeria 128 dinar 974. And the Moroccan dirham is trading at 9,177 to the dollar. In Angola, the dollar is trading at 912 kwanza. The Congolese franc 2,170 to the dollar. Commodities markets, gold is trading at $5,010. Platinum, $2,089 per ounce. Brent crude oil is at $67.73 a barrel. For any business stories you would like to share with us, please send us an email to newsroom@channelafrica.co.za or call us on +27 714 4459. For Channel Africa Business in Johannesburg, I'm Thabiso Lehoko.
Business news on Channel Africa. The African perspective.
And from the sporting desk with the latest from the business of sport, here is Figile Lingwati.
Sports on Channel Africa. The African Perspective.
Thank you, Thami. We kick off with football news. Orlando Pirates may finally sell Relebohile Mofokeng for $6 million. Mofokeng has been linked with a move away from Orlando Pirates since his first season with the Orlando Pirates. The 21-year-old winger has reportedly attracted interest from teams in the US, Europe, Israel, and Saudi Arabia. However, despite these rumors, no official offers have been made for him, while his ideal move would be to play in one of Europe's top 5 leagues. Supporters feel he should be allowed to leave South Africa, even if it means playing in the US or Saudi Arabia. Currently, Mofokeng's market value is approximately $2 million. This could easily double if he has an impressive second half of the season and helps his team secure their first league title in over 14 years. A strong performance at the FIFA World Cup could lead to clubs offering over $6 million for him. More football news. Minnesota United announced that the club has signed attacking midfielder James Rodriguez to a guaranteed contract through June 2026 with a club option through December 2026. Rodriguez will occupy an international roster spot pending medical and receipt of his P1 visa and ITC, that's International Transfer Certificate. He isn't even guaranteed a whole season. Yes, but with $5 million for the first 6 months of the contract with the club through June 2026, the Loons went 16-8 with 10 draws last year to finish 4th in the Western Conference and fell in the playoff quarterfinals. On to athletics. Nigeria's 10-kilometer runners are expected to end big as Lagos City Marathon unveils prize breakdown. Beyond the 10-kilometer event, substantial financial incentives have also been confirmed for other categories. With 8 days to the 11th Access Bank Lagos City Marathon, excitement is building up. In the 10-kilometer race for both men and women, prize money has been structured to reward both the depth and the performance. A total of $365 awaits the winner, while $292 goes to the runner-up, $210 to third place, $146 to fourth, and $73 to the fifth. The Elite 42-kilometer International Marathon will feature a total prize purse of $250,000 with $50,000 reserved for the overall winner. And South Africa Sports Confederation and Olympic Committee SASCOC Athletes Commission Chairperson and High Performance Chairperson Khozo Mokoena has expressed his excitement ahead of the Commonwealth Games. SASCOC, National Lotteries Commission and the Department of Sports, Arts and Culture has lots of money for the athletes. Historically, gold medalists receive up to $225,000 with incentive also extending to coaches and support staff. Cash incentive is based on previous Commonwealth and Olympic structures. Gold, $25,000, silver, $12,000, and bronze, $5,000. Mukwena has more.
I think, for Team South Africa, it's always an exciting time because, and for myself also, for the High Performance Commission of SASCOC, it's these games are very vital so that we can know exactly how we are faring, towards 2028 Olympic Games, although not all the countries are competing at the Commonwealth Games.
For any sports stories you'd like to share with us, please send an email to newsroom@channelafrica.co.za or call us on +2711 714 4459. This is Channel Africa Sport with me, Fidel Ngwati.
Sports on Channel Africa. The African Perspective.
It is exactly 4:49 Central African time. Thank you to the Economics and Sporting Desk. We move on now to an event that really is a continental and global pulling point for South Africa, and that's the mining Indaba. We're going to focus this afternoon on some of the events related to mining, and specifically women in mining, on the sidelines of the mining Indaba, which is taking place in the Western Cape, South Africa, that is in Cape Town. We focus today on the Women Economic Assembly Wakona, in partnership with the Small Enterprise Business Development and Finance Agency, SEDFA. Tomorrow they'll be hosting their inaugural event on the sidelines of the mining Indaba. The event, which is themed She Mines the Future from Pit to Port will convene key stakeholders dedicated to advancing women's participation across the entire mining value chain. For more on this, we joined on the line by Gertrude Marape, Women Economic Assembly's co-lead on the mining pillar. May Gertrude Marape, welcome to African Business. Good to have you with us.
Thanks for having me, Thami.
So what is it that motivated Wokona to focus on this inaugural event on women specifically in the mining sector?
Okay, thanks for that question. So mining sector, it is a very an important sector in the country. To South Africa, it contributes around 6 to 8% to the GDP. But over the years, as you would know, mining industry historically has been a male-dominated industry. So what we have picked up is, as much as there has been interventions that has been done by various stakeholders, including private sector, the women still remain not fully integrated basically across the mine value chain, especially the women-owned businesses. So basically, the women, they're still not fully participating across the mine value chain. So what we have actually done with this event is essentially to bring the different stakeholders from government, from public sector, including the development funding institutions, to really have a dialogue that can help to accelerate the participation of women across the mine value chain.
And what would you highlight as some of the key objectives behind your theme? It's a theme pregnant with meaning. She mines the future from pit to port. What would you consider a success coming out of this particular event?
Yeah, so with the theme, what you're essentially trying to do is to understand what are the challenges that are still preventing women to participate across the mine value chain. So from pit, essentially, we're looking at starting from exploration, including processing, beneficiation, up to logistics. So that's what actually informed the theme, that what are the strategies that can be implemented to actually increase participation of women across the mine value chain. So with this event, what we're trying to do is to actually increase or improve the participation and the partnerships between the various stakeholders to unlock the opportunities that are available across the mine value chain.
And what have you found to be those barriers, at least the biggest barriers that women are facing within the mining industry? And perhaps let's look at some solutions as well. How can those barriers be removed? How can these issues be addressed?
Yes. So you will recall that obviously mining industry, it's a technical industry. It's a very capital intensive industry as well, and risky industry. So one of the barriers is obviously access to funding, but also access to information that can lead to unlocking the opportunity. So what we're hoping with this event, we're hoping that through this dialogue, it will strengthen the partnerships and also avail the information. So entrepreneurs will be able to know how to access information, where to get this information, and also other opportunities. Because, for example, there are other mining companies, for example, that also have funding opportunities available that some entrepreneurs are not aware of. And also networks. I think it's also another platform that we are creating as women to create an environment where women can, for example, have access to the networks, the decision makers, for example, people who are in the procurement spaces across the mine value chain.
You know, you've really spoken a lot about the opportunities that exist for women. And I wonder how ready women are to actually take advantage of those opportunities, because it's one thing having an opportunity and then another being able to actually make use of those opportunities. So as an organization, what are the supportive development skills that you put in place for women in mining, specifically in the technical or maybe even leadership roles?
Yes. So one of the things we're doing is basically through this, because what happens is a lot of mining companies, they do have this support programs in place. And some women don't know about the programs that the mines themselves have actually put in place. So what we're trying to do is to basically bring the women entrepreneurs closer to the mining industry so they can know and basically know where to go to access these opportunities and also know about the support systems that are available. Like, for example, you would recall that if you look at, for example, what the challenges that we're having, that obviously now the department together with IDC, they've actually put exploration fund in place. And what we've done is we basically now have been having conversations with various key stakeholders involved so that women know where to find those opportunities. And also, again, for example, the funders and the other stakeholders that avail these opportunities to sort of like know as well what are other the barriers that could prevent women from accessing these opportunities. For example, on the panel, we will be having a woman entrepreneur who will be basically sharing her journey, her successes and her challenges. And the idea behind that is to, with that information, then it will enable all the stakeholders in the room to know what other challenges are women facing. And then it will also help them then to know what other programs maybe they need to put in place if maybe that speaks to those challenges if they don't already have the solutions. Because sometimes, yes, you may find that mining companies, they've already came up with solutions, but maybe the entrepreneurs just don't know maybe where to find those solutions.
And talking about changes that are structural and that are actually long-term, there need to be policy adjustments in order to ensure that those changes are actually sustainable. Could you talk us through some of the work that you as Wekona do when you work with governments and various industry bodies in order to influence policies that support gender equity in mining?
Yes, thanks for that question, Tam. I think if you look at currently, I think the policies that we have, they're mainly talking about growth in a work environment, but not so much about the entrepreneurs. And so what the conversations that Wekona has been having with various departments, so one of the things we have highlighted is the policies also need to include basically procurement, needs to also include strategies that can help accelerate participation of women across various sectors, various industries.
And are there other sectors that you've mentioned that you as a woman in mining work very closely with in order to ensure that there's congruency of policies between the two?
Yeah, so Wekona, for example, we are not only focusing mining, so there's various sectors. So there's agriculture, for example, there's tourism, there's property, and there's also finance. So obviously there are people who are leading those sectors, but they're also looking at those sectors in terms of understanding what are the challenges, what are the policy, for example, recommendations can be made to actually improve participation of women.
And I wonder if you work with women's organizations that are equivalent to what you do for other countries on the African continent.
Yes, so we are certainly, we have started that working with other organizations in Africa. We have started collaborations and conversations. For example, the UN, we know that they have a gender desk there, and we're also looking at basically other organizations. So even within Wekona itself, some of the members of Wekona are actually members of other organizations coming from Africa that are actually focusing on the African continent. So we are trying to constantly looking for opportunities to collaborate, strengthen the partnerships, and learn as well from our counterparts in Africa.
Oh, great.
And other countries as well, yes.
Well, thank you so much for your time and wishing you all of the best for your event alongside the Mining Indaba. Thank you for your time, ma'am.
Thanks so much.
Thank you. That was Gertrude Marape from the Women Economic Assembly. She's the co-lead on the mining pillar. She takes us to exactly 4:50 Central African time. In just a moment, a conversation with Joelle as she keeps you updated as to what she's got in store for you on Vue d'Afrique.
Africa in Business. Africa in Business delivers key insights and updates on Africa's growing markets with Thami Ngubeni. The African Perspective on Channel Africa.
Channel Africa.
In about 10 minutes' time, the lovely lady takes over for Vue d'Afrique. Madame.
Bonjour Thami, comment ça va?
Très bon, merci. Très bien. Yeah, but you're looking very beautiful.
Merci beaucoup. Merci, bonjour à tous les auditeurs de Channel Africa sur Vue d'Afrique tout à l'heure. Il sera question de Oxfam qui alerte sur des déplacements massifs des familles à nouveau contraintes de fuir pour sauver leur vie face à l'escalade du conflit au Soudan. Et nous parlerons des quelques 700 militaires sud-africains participant au contingent militaire de la MONUSCO en RDC qui vont quitter la mission très bientôt. Et aussi en Afrique du Sud, ouverture ce lundi à Cape Town d'Africa Mining Indaba 2026. C'est tout à l'heure sur Vue d'Afrique. Merci.
Merci beaucoup. That's well coming up at the top of the hour.
Let's just do it.
Your life just got easier. Get the Channel Africa app and take us wherever you go. Catch the latest news, enjoy your favorite shows, stream the music you love, and stay connected to the continent. All in one spot, right in your pocket. Simple, quick, and always with you. The Channel Africa app. Download it now on iOS and Android.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
It is exactly 4:51 Central African time, and in this week's F&B slot, we look at mining and manufacturing in South Africa. Stats South Africa releases production numbers that will show how both sectors are faring. And to unpack this further for us this afternoon, we're joined by Siphamandla Mkhwanazi, Chief Economist at First National Bank. A very good afternoon to you, Siphamandla.
Good afternoon to you, Thami, and greetings to your viewers at home as well.
So we are going to look at this week and reflect on the week that was. But before we do that, let's take a look at manufacturing. It saw a rebound in the month of January. What do you make of that?
Right. So this is a sector that underwent a bit of pressure towards the end of last year. And it's a bit inexplicable because towards the end of last year, that's when we started seeing a number of green shoots in the South African economy. I mean, sentiment turned positive. Energy is no longer a constraint. So there were a number of positivities towards the end of last year. However, the manufacturing sector couldn't take advantage of that, partly because of the trade tensions that the sector has had to navigate, but also the strength of the rand. So when we celebrate and say the rand is strong and it's good for the country, there are actually some manufacturers who are negatively impacted by that. So it will take them a little bit of time to react to that. So the rebound suggests that those conditions are now getting better. They've had a little bit of time to navigate those kind of issues, and we take the positive on this count.
So when we look at mining production, later on this week, the stats will be released. But in the month of November, we did see a contraction in mining.
Yeah.
How were things looking in December?
Yeah, so naturally, the December month is not a very good month for mining production. I mean, mines do close somewhere mid-December, so we don't expect that we will see a massive rebound. The story of mining, Thami, is quite an interesting one in that there are certain sub-industries within mining that are doing well, and there are those bulk ones such as coal, such as iron ore, that aren't doing as well. They are partly impacted by the constraints at the ports. Now, those constraints are starting to have actually started getting better. It is for the miners now to start increasing production. And the second part I wanted to mention here is that we are seeing record gold prices. But when you look at production in SA, mines haven't actually expanded. Gold miners haven't actually expanded their production there. So they are yet to take advantage of this positive commodity price cycle.
Right. So manufacturing also went out on Thursday, and there we see that output also declined in the month of November. Are we expecting any improvement in December's numbers, or is it the same rationale around the mining sector?
Right, very similar rationale. So when we look at the manufacturers PMI, which is a leading indicator, it has already shown that January is probably going to be a better month compared to the last few months of 2025. Now, the trade tensions, yes, they still exist. They are still there. We cannot run away from that, but manufacturers have had time to implement solutions that would help them navigate those issues. So we do expect that we will see some sort of an improvement, although not yet shooting out the lights. The stronger numbers should be expected more towards the middle of next year, when we expect production to really start ramping up, linked to the CapEx, the capital expenditure that is now starting to come through in the manufacturing sector. So a better year in 2006, maybe not so much towards the end of last year.
So then let's take a look at what might be on the cards for this week. Anything specific on your end?
No, the week is not as busy. All eyes are now towards the budget, which the South African budget, which is showing some signs of improvement. I think, Thami, we haven't spoken about a positive budget in South Africa in quite a while. So we take the positives, or we take the positive news, and that is also helping to augment sentiment towards South Africa, and long may it last.
All right. Long may it last indeed. As Pamandla Mkhwanazi, always a pleasure. Thank you so much.
Thank you.
Have a great one. That's Pamandla Mkhwanazi, Chief Economist at First National Bank. And he brings us to exactly 3 minutes to 4 p.m. Central African time. We're going to wrap up with this particular story, a look at a non-governmental organization in South Africa. It's called Africa Tukun, and it deals with the empowerment of youth and children in the country. Now, they've stated that in February, nearly 5 million youth in the country will systematically disappear from the country's economic landscape. They say it's because tertiary institutions will not be able to accommodate all school-leaving children, and the others will not be able to find jobs. The organization highlights this as the country prepares for the State of the Nation address by President Cyril Ramaphosa this week. Ramaphosa is expected to touch on youth unemployment as well. According to Statistics South Africa, only 4.7 million youth were employed in the second quarter of 2025. Some really troubling figures coming out of that particular report by Africa Tukun. That's how we wrap up this Monday edition of Africa in Business. I'm Thami Ngubeni for myself and the entire team. Give yourself a splendid day further. Restez connectés as Vue d'Afrique takes over at 5.
Investment opportunities that put the continent first. Africa in Business with Thami Ngubeni.